what you really want and take some time. You gotta be focused now, no play around, and trust the process to keep your eyes on the prize. I can tell you what I'm seeing. You can have it if you dream it. Just be brave and you'll achieve it all. It all. I wanna know if you really want it, and if you do, then just shout it loud and clear. I wanna know if you really need it, and if you do, then just shout it loud and clear. Loud and clear, loud and clear, loud and clear. Shout it loud and clear, loud and clear, loud and clear, loud and clear. Shout it loud and clear. And there ain't no stopping now. You're the one. Shine brighter than the moon and the sun. Be great at what you do. Give it all of you. And trust the process to keep your eyes on the prize. I can tell you what I'm seeing. You can have it if you dream it. Just be brave and you'll achieve it all. It all. I wanna know if you really want it, and if you do, then just shout it loud and clear. I wanna know if you really need it, and if you do, then just shout it loud and clear. Loud and clear, loud and clear, loud and clear. Shout it loud and clear, loud and clear, loud and clear, loud and clear. Shout it loud and clear.
Hi, everybody. Good evening. Hi. How you doing, everybody? Staying warm, I hope. Staying warm. Oh my gosh, I just looking at the weather in the areas here. Actually, in the U.S., it's extreme cold, snow, ice stretching from Texas to New England. That's over 2,000 miles. Oh my gosh. Wow, wow, wow. Well, we are in the Western New York area, and we are traditionally known for our cold, cold weather and snowy weathers, and it is cold and it's snowy, but not like that. Anyway, all right, let's get started here, folks. I think it is now 8:01. I think if I hit this button, we should be good to go. All right, good evening, everybody, and welcome to DayTradeSPY.com's weekly fireside chat. Introduction to trading, preview of the coming week. And I see a lot of people are kind of coming on still. They're joining us here right now. Excuse me. And some comments already in the questions box. There's the questions box. You'll find a little icon. By the way, it is January the 25th, 2026. It is January. So you can expect snow this time of year, right? But I didn't think down south you guys would have such cold temps and snow and ice. This is safe for us here in Western New York. Um, of course, here in the Buffalo, New York area, we don't put our lawn our patio furniture away until there's 6 inches of snow on it. But I shouldn't be joking about this, but our major snowstorm, I think the last really big one was Christmas 2022. 47 people died around here in that storm. 47. Wow. We've had some bad storms. I'll never forget the blizzard of 77, but I digress. Wherever you are, stay warm, stay safe, stay indoors if you can. I don't have to tell you that. Anyway, please use the questions box. You'll find a little questions box icon on your Zoom dashboard, and click on that. I'm the only one that sees that, by the way, so you can go ahead and say whatever you want. We're going solo here tonight. Yes, John is off, and he does Wednesday night sessions. He's good for the Wednesday nights, and I'm good for the Sundays. And together, this is what we do. All right, so let's move on here. Please advise us, by the way, in the questions box. If you're new to trading, new to options, new to day trade spy, if you want a bit of a primer, I can give you that. Let me know in the questions box. right now, and then I'll jump to it. If not, then I'll just go forward with the weekend review, week coming up and whatnot, and we can do that. So you'll find a little questions box icon on your Zoom dashboard. Again, I'm the only one that sees that, so we'll go ahead and say whatever you want. So, okay, right. Let me know where you're all from too, by the way. Just kind of get an idea how you're handling the weather out there. If you're, I'm gonna guess that you're probably okay. Right, and that you're sort of hunker down in this weather pattern is just it's pretty unusual from what I'm seeing here. Orlando area, okay. As I understand it, in the Orlando area, it was pretty sunny and warm earlier today, but the next few days supposed to be a little bit cooler. Is that right, Matthew? Let me know if that's the case. We're looking to get over there too pretty soon, but I think in the next couple of weeks we're supposed to head over there, and I was kind of waiting for the temperatures to um, to warm up a little bit here. I'm not too thrilled about going somewhere where it's like 52 degrees. I can stay home for that. If you're going to be cold, you might as well be cold at home, right? If you're going to be indoors, you might as well be indoors and cold. Um, I like the Orlando weather actually. It can muster up into a storm pretty quick here and stuff. To see Georgia, Tifton, Georgia. Okay. And okay, all right. We got people from all over the place here. All right. All right, well, let's get started here, folks. Let's get started. I'm going to put up this disclaimer here for a few seconds here. Houston, Mark in Houston. Houston's kind of cold now too, isn't it? Yeah. All right. Folks, I think you understand the disclaimer here. Standard disclaimer. You'll only responsible for all your own trading, and past performance does not guarantee future results. Let's move on here. Okay, there you go. There you go. Meet your hosts. Yours truly. My name is Hugh. And most of what I learned trading, I learned from the trenches, folks. I'm going to be frank with you on that. I took a lot of courses, but the really good stuff, the stuff that I teach, that's the stuff that I learned the hard way. There's a big difference between theory and the reality of trading. All right, big difference. Day and night, day and night, day and night. You can get the theory in a lot of different places. And a lot of places will give it to you for free. Okay. But I can assure you that is not the reality of trading. The reality of trading is a lot different. And even things between paper trades and real trades, I can argue both ways that paper trading is not real because you don't have your hard-earned money in that. It's pretend money, monopoly money, right? Um, and if you lose it, so what? When you put real money into it, everything changes. All the dynamics, everything changes. You're watching your equity float up and down. As it goes up, you want to ride it up higher, right? So you stay with it. The greed kicks in. As it goes down, the fear kicks in. You want to dump it. You wouldn't believe how many people I talk to that say, "Oh, they're so happy they only lost 20%." You're happy you lost 20%? And then they're actually angry at themselves. Believe it or not, they're very mad because they only made 20%. I said, you need your head, you need to see a shrink, is what it's, okay? If you're making 10%, 6%, 5%, 20%, whatever, you should be happy, right? And if you lost money, you shouldn't be happy. What are you happy with? Then they said, when I asked them that, they said, well, it's because I could have lost a lot more. Okay, you could have lost a lot more. Okay, well, that's good. You only lost 20%. That's good. But I get it. I totally get that. But this is the kind of thinking that we have to really get our heads around in the whole psychology of trading. And yeah, and John, I'm flipping over to John's comment here because his philosophy is very basic. Take what the market will give you. If the market gives you 10 cents or 20 cents or 5% or 6, 7, 8%, take it, take it. Wait for the next setup. Take the next setup. Take the next one. Take the next one. Don't hold out on some of these longer term trades where you think that oh, it's going to go to the moon, and I mean sometimes it does, but take what the market will give you and then go back into it, go back into it. Anyway, my in the trenches trading has worked very well for me by taking small multiple daily gains, all right, short-term breakout trades. I find that works for me. Now, you might be interested in something else. I know some people like swing trading. I used to do that a long time ago. Never got too excited about that. I mean, when it worked against you, it was bad, but when it worked for you, it was exciting. But I never liked the idea of having to wait days or weeks for these options to materialize. And meanwhile, with the way we trade, of course, you're losing in theta value, right? Time loss. Now, the way we trade is very simple, right? Anybody who's new on, you will know that what we do is let me see here. Okay, this can you set up? Okay, William C., good to have you here. Okay, now I'll get to the questions later. All right. So, the way we trade is we don't do any spreads. There's no spreads, no high risk trades, no naked trading. It's not the way we dress. It's actually where you're actually trading options where you are not covered. Your assets are not covered, which really exposes you for when, not if, but when the stock goes against you. And it's a bad spot to be in, right? You don't want to get a margin call from your broker. They're not a lot of fun. And they really aren't, and you have to cover your trades, and so okay, now I got to juggle money around. I got to find $30,000 to stick into the account to cover my shorts, and oh, forget it. The way I like to trade is buy first, then sell, calls and puts. If you expect the market to go up, you buy a call option. If you expect the market to go down, you buy a put option. Calls up, put down. I know they're funny terms, and but you'll get used to them. You'll know calls and puts better than your own kids' names, and um, and they have certain attributes attached to them. Options are not like a stock. A stock you buy, you hold on to it, and you can hold on to it forever, for a long time, for a short time. It doesn't matter. You own a piece of this equity, right? You have an equity stake in something, maybe a company or a exchange traded fund or something. Um, and and you can hold on to it forever. You can will it to your kids, right? Uh, an option is not like that. An option is a contract. The contract simply says, as an options holder, that you have the right but not the obligation to trade the underlying stock for a certain price by a certain date. There's two forms. There's the American system, which is what SPY is, which says that you can trade it at any time. You can convert your options any time into stock up till expiration. The European system is a little bit different. It says you can only convert it at expiration. At expiration. The S&P 500 stock, which is the SPX, that is under the European system. The SPY, which is the stock that follows the S&P 500, which is what I trade, which is what I like. That's under the American system. Don't have to get too, you don't have to know too much about it. I'm just giving you some background information here. I love SPY. It's the highest traded stock out there as far as the ETF is concerned, and it's very predictable in its patterns. It's very predictable in its nature. It covers the top 500 stocks out there. It's very diverse. All the sectors are represented in there. Essentially, when you can determine where the economy is going, you can pretty well determine where SPY is going. And I'm very happy to say that last Thursday was January the 22nd, which was actually SPY's birthday. SPY was born on January 22nd, 1993, which makes it, is that 33 years old? No, really? Yeah, 33 years old, I guess, right? 2026 plus 1993, 33 years old, yeah. SPY was born on January the 22nd, 1933. It's an exchange traded fund founded by a group of, I don't know who these people are. Okay. Obviously bank employees. Now, here's the cool thing about this, and I should probably dig up the newsletter I wrote about the Spy Kids. So what happened was they had to attach this ETF, exchange traded fund, to people. So the group of people who came up with this stock ETF SPY, they got their kids involved. They're young kids, little kids. and they put their names on them. And there's a bunch of kids. I'm not sure how many. I got to dig it up. I used to know all this stuff before, but these kids are now since they've grown up and they're doing something else. But I don't know if I'm sure they understand that they are attached to this ETF. I'm not sure what that means. Do they cash out and make trillions of dollars? I don't know, but it's pretty exciting. I got to dig out that newsletter one day and bring it out and see where they are and see if I can find these spy kids. But anyway, January the 22nd was the birthday just the other day here with Spy. And the interestingly enough, it was my birthday too, the same day. And I find that very strange how, here it is later in life. I just turned 71 and my birthday is the same as Spy's. So here I am. That's all I trade is Spy. That's all I trade is Spy. I'll Spy all the time. John, he's my partner in crime in the trading room. Super nice guy. He used to be Eagle Financial Products guru in a whole separate vein. He used to issue a newsletter every, I'm not sure how often it came out, quite often, I think. I know he's a prolific writer. He loves to write and talk, and he's very comprehensive in his writing and very thorough. And anyway, he's now part of the trading room with me, and an excellent gentleman. Lives in Texas under some very cold weather right now. I was talking to him earlier, and he's hunkered down. He's got a ranch. And he's concerned about his animals, right? So we're hoping his animals are going to be okay here. I'm trusting they are. John's actually a litigation lawyer by trade, and he gave up law to trade. Now, his real passion is, believe it or not, teaching other people how to trade. So he's doing what I'm doing. Now, here's the interesting thing. John has his own set of indicators. I have my own set of indicators. And we have a saying that when our indicators unite, our trades ignite. So we could be looking at a situation, and as we see it unfold, John could say, I could see this thing bouncing and going back up. And I say, I could see the same thing. So if you're in the trading room and you hear both John and I talking about this, that I think the market's going to go up, you might want to buy calls. You might want to buy call options, right? Call up, put down. Anyway, John's a terrific guy, and we have a lot of fun as well. That's one thing I think. Um, that's one thing that I really enjoy, and I look forward every every day to the trading room, right? Because John's there, and we do this together, and we just have a blast. All right. Anyway, I'll tell you more about that a little bit later on here. I kind of want to move on here, folks. A couple announcements to make. First of all, Spy on the Market is a newsletter that goes out every Thursday. Very easy to subscribe. You really should subscribe to it. It's not a big, long, boring newsletter. It's only about a 3-minute read, 750 words to be exact. Okay. To subscribe, just go to our website, daytradespy.com, and when the pop-up comes up, just leave us your email address and you'll get on it. And this week's topic is going to be our 2026 goal. That's live in the trading room, and I'll talk about that in a little bit. Last year we had a challenge, turning $5,000 into $50,000 in 1 year. We hit the target in the middle of September. This year we're doing it a little bit differently, and we're going to be talking about that in the newsletter. So the thing is to get the newsletter, we kind of discuss it in there, and I'll talk about that a little bit later on here tonight too. So another announcement to make, I got to tell you, taking our trading room to roadshow, right? We got a roadshow going on here. We're going to be in Baltimore, Maryland, April the 21st and 22nd. John and I are rolling in on the 20th, and we'll meet everybody in the lounge. So come on down in the lounge there. We're going to exchange stories. I'm actually looking forward to it because I'm looking at exchanging horror stories about trading and sort of the history of whoever wants to hear it. If you don't want to hear it, that's fine too. But anyway, it's going to be an educational workshop. No stone left unturned as John and I actually get right into this. We are going to be discussing our trades, pretty well everything. There's going to be live trading. We're going to teach you our strategies, techniques, questions. There's going to be no question left unanswered. The thing is, it's going to be a real intense 2-day training course. So I encourage you to come out and meet us. We would love to see you there and get to meet you. All right. We don't have very many opportunities to meet the people in our trading room or anywhere else in Rio. And this gives us a perfect chance to go and meet some of you people out there. I know some people are already flying in from all over the country to see us there in Baltimore. Try to pick a central place and tried to pick a time of the year when the weather shouldn't be too bad. Near the end of April, so we're kind of hoping flowers will be out by then, sunshine, lots of sunshine, good weather. So we got our fingers crossed on that one. Folks, space is limited to only 100 participants in this, so you want to get in on this early. I don't know where they sit with this right now, but I'm promoting it tonight anyway, right? Because you really want to get in here. Now, there's some really cool early bird pricing. 29.95 for the 2 nights and includes the 2 night hotel stay. And you'll save yourself $500 off the regular price. Let me just go in here. What I want to do is this. This red on blue is hard to read. So what I'm going to do is change this to this yellow. That's a little bit easier to read, right? All right, so the early bird special is, like I say, 29.95. It's really funny whenever I click on something, this camera here on my PowerPoint freezes. And it always seems to catch me in the worst possible pose. Must be AI doing it. What do you think? Anyway, so early bird pricing, or you can do 24.90 and save $1,005 off the regular price if you don't want the hotel rooms. Okay, the hotel room, all right, for 2 nights. So, and the hotel room is going to be at the Hilton. Is it the Hilton? Let me just check that, make sure. Let me go back a spot here. I'm pretty sure it's the Hilton. Yes, it is. Baltimore Hilton. All right, that's where they're going to be. So, beautiful city. Educational workshops going to be a lot of fun, and we're going to move on. We are going to move on now. All right, that's what we're going to do. We are moving on, folks, to what happened this week. All right, we're going to quickly go over this week because the past isn't quite as important as what's coming up. So, no trading on Monday. It was Martin Luther King Jr. Day. Markets were closed on Tuesday. SPY plunged over Niagara Falls here, over 2% after President Trump threatened NATO members. All you members out there, tariffs. You want to give me a hard time on Greenland? I'm going to give you tariffs. Trump loves the word tariffs. And then Wednesday, the markets rebound after Trump announced at the World Economic Forum that he's got a framework on a future deal over Greenland. It's been reached, but he did not disclose the details. But SPY rebound pretty good on that and went right back up to not quite the same level as it came off of, but it was pushing up back into almost that range. By Thursday, we did get up just to touch that range in there, right? Just touching the range. Didn't quite get into it all the way, but the S&P 500 did add another 0.55% to finish higher. But it was fueled by good unemployment claims numbers rather, and the personal consumption expenditure numbers, the PCE numbers. That is the Fed's key inflation indicator that they use to determine whether they're going to lower rates, keep them the same, whatever. And of course, they also were supported by some very strong Netflix fourth quarter results. That was on Thursday. We bounced around range bound here on Friday, a little changed. SPY stayed range bound, capping off a tumultuous week with President Trump's push to acquire Greenland. He's on this Greenland kick right now, and I mean, all these things make sense in their own way, and like him or hate him or whatever. Not to get political or anything, but it's a real issue for the market. The market's trying to unpack all of the you know all of the data that's coming at us on a day-to-day basis, almost hour to hour, and all of these are very major events that shape the way the markets are going, and the market's trying to make sense of it all. But we're still edging higher, and we're doing okay here. Looking at seasonal charts. Now, this is a seasonal chart for those of you unfamiliar. That blue line up there, that's where SPY is now. And the red line is the average of the last 5 years closing price on the daily chart. So if we zero in on this here, focus in, we're going to see that SPY actually rose about 3 points last week. And historically, it rose about 2 points in the following week coming up. Last week, we had a lot of geopolitical distracts. Trump's tariffs, short-lived. They flared up on a host of European trading partners. Short-lived Greenland storm. The S&P 500 registered its largest single-day drop since Liberation Day. Quick emergence of the deal to address the U.S. security concerns in Greenland helped equities rebound. I see there is extra space here. I want to remove the space. There we go. All right, let me just go back here. And Greenland headlines quickly were replaced with a focus on economic and corporate fundamentals. We had a raft of macroeconomics data as well. Solid economic background, folks. Unemployment claims continue to come down, come in at low levels. And the consumer confidence report, I think it was on Thursday, moved to a 5-month high. You also had the personal consumption expenditures numbers as well that had played an important part in the markets accepted the fact that the PCE numbers came in as expected. Actually, I think on one of the indicators was even a little bit lower than anticipated. So that was a good thing for the market. Anyway, here's a look at few signs of distress in recent unemployment insurance claims. Unemployment insurance is coming down. All right. We're just coming in under the 4-week average. We're drifting down here from the latter part of last year, middle part of last year down. Looks like we're coming down here. Decline in U.S. unemployment insurance claims in recent weeks. If this continues, that's a good thing here. Now, what we've seen here last week, in fact, in the last several weeks, is that there is rotation in the markets away from the U.S. large caps equity towards the smaller caps and international stocks as well. Russell 2000 saw an increase of, I guess, about what's that be about 7.5%, and some of the other markets as well, right? The Magnificent Seven, which is the top seven stocks here: Apple, Amazon, Alphabet, Meta, Microsoft, Nvidia, and Tesla. These seem to have taken a back seat. A lot of, I'm guessing here that a lot of the institutional investors are taking money out of the Magnificent Seven and putting them in the smaller cap stocks like the Russell. And that's where the growth is probably anticipated this year, at least initially anyway. And a lot of AI type activity as well is pushing on the Magnificent Seven stocks right now. So a lot of these stocks are coming down while the small to mid caps is pushing higher. So that's kind of what we're seeing now in the next little while here. The S&P actually dropped 0.4% this week. Year to date, though, here it is. We're pushing near the end of January. We are up 1%. And if this continues into the end of the year, we should be, around what, 13, 14% or something, if that's the case. Of course, there's going to be a lot of activity up and down between now and then. The Nasdaq also lost 0.1%, and the Dow dropped 0.5%. And these are the numbers year to date. The Dow is still beating everybody else here, 2.2% year to date. So it's pretty impressive there. Coming up this week, we have durable goods orders on Monday. On Tuesday, President Trump speaks. President Trump speaks on Tuesday. And let me just get an idea as to where he is, what he's talking about here on Tuesday. Bear with me for a second. I want to get an idea of what that's going to be about. He's going to be speaking about the economy in Iowa. All right. He's going to be speaking about the economy. No doubt he's going to want to press it to the upside. He's not going to be talking about doom and gloom at all. I'm sure he's going to be building up the economy. So, Conference Board Consumer Confidence Report, also the Richmond Manufacturing Index is going to be on Tuesday as well. By the way, Trump is speaking here at what time? I believe it's in the morning sometime, Eastern time. Look at it, Eastern time. Sorry, I'm lying to you here. It's tentative. I do not have a time for the Trump speak on Tuesday. It's tentative. So, all right, on Wednesday, that's the big one, the Fed funds rate. They are going to be determining whether to keep rates the same or lower them. I believe it's something like 97, 98% of the analysts believe that they are going to keep the Fed funds rate the same. And that's coming up on Wednesday. Another 2 or 3% think the markets, they're going to lower the rates. Nobody has said they're going to increase rates. That's a good sign. And unemployment claims on Thursday, and on Friday we've got PPI, Producer Price Index, and also a Chicago PMI report. So I'm checking in the volatility in this whole thing. We're expecting medium on Monday and high the rest of the week, Tuesday, Wednesday, Thursday, Friday. All right. That's going to be a very high volatile time, and we're going to be trying to make a little bit of money, right? That's the idea here. So, folks, the stock market gives us many opportunities every day. Our job, we show you how to spot them and how to trade them. And I am going to make that a little bit bigger so that you can actually see that without squinting your eyes. How's this? Okay, there we go. We show you how to spot them, how to trade them. Let's bring this up here a notch. There we go. Notice how I'm, working the PowerPoint as I'm speaking to you. Okay. All right. So here's what we're doing here in the trading room. All right. This is our 20, we're calling it the 2026 goal. We are tracking all the trades that we do in the trading room. All right. I'm going to show you where we are with this. And we are recording these as if we are only buying 5 contracts per trade. Now, I don't know what John is trading. I can assure you I'm for the most part, buying a lot more than 5 contracts. But we're just considering if you were to buy 5 contracts in the trading room, right? Doing what we do. Follow along to the end of the year. We're going to see where we end up. All trading room trades are included. This is not a separate goal like we did last year, where we have this goal that we're trying to reach, and we're going to do everything we can to get to it. So we're going to take some high risk trades or anything else. We're just trading consistently, so you can actually enter this program at any time and expect to do fairly well. All right. But it's something that we do in the trading room. All right. We don't send out alerts or anything else outside of the trading room. That's not, we just do it in the trading room. And you just got to pay attention, and we talk about what we trade, right? And if you're not in the trading room, you might want to join it because we're making money. All right, we're making money. Are all of our trades winners? No. So here's a look at recent trades. I just took the spreadsheet here from January the 16th, which is last Friday, right? Last Friday on. And we've had some winners, some losers. So you had some winning trades, some losing trades. I'm just going to move this over to the side and I'll give you an analysis as to what we did here so far. So far, since we started, we had 72 trades, 5 contracts each. The average investment is 25.52. All right, we had 64 wins, 8 losses. Year to date, our gains $3,205. All right, $3,205. In other words, if you were to invest on average 25.52, buying only 5 contracts each trade, and doing exactly what we did here. And again, this is only the trades we narrated, opened up, and executed in the trading room. All right, this would have gotten you 64 wins, 8 losses. And yeah, we had some pretty bad losses. We're trying to trim down those losses now. We're trying to really see, we're trying to keep a real handle on the losses. We don't want a lot of losses. So, but we're up 32.05, and I think that's not bad. Now, just coming in on 5 contracts. Let's say this took us into what, 23 days times 31 times 12. Well, we should hit around $52,000 profit this year on this if we continue going the way we are. Okay, which is not bad. What is that? That's about what, 20 times your investment. So we're happy with that. All right, so I got a 2-minute tutorial for you right now, folks, and I'll get to the questions in a little bit. This tutorial, I'm actually pretty excited about this one here. Um, this is Friday's trade. I'm going to go over this here, Friday's trade. We're going to talk about chart patterns. One of my favorite chart patterns is this. It's the inverse head and shoulders pattern. All right. And what happened Friday when we saw this in pre-market? So what happens is John and I, we get together in pre-market and we discuss where the market's going to go, and this is where we pick up the pick of the day and where we determine what we're going to trade and stuff. But when we saw this, we got pretty excited about this. We saw this pre-market activity here is in the range right in here, and been sort of stuck in this range bound here, a bit of a neckline here. But we saw the market come down around 8:30, and we saw what turned out to be the left shoulder here because the market went back up. This is called a dead cat bounce, right? Dead cats don't bounce very high. Throw a dead cat down and it doesn't bounce right. It just goes plump, you know. I don't know whoever came up with that term. There's a lot of weird stuff in the stock market. But it came up a little bit, found a little resistance, came back down again and formed the head. So here's a guy, he's actually standing on his head. All right, and then it went back up again here. This guy's very excited. Another little resistance came back down again for the right shoulder. There's the right shoulder. Now, when we saw this, okay, this baby's going up. It came up here, so in pre-market we determined it's going up. We did hit a little resistance here, not a problem. Came back down again to form a second right shoulder. So the guy's got two right shoulders. He's standing on his head. But then we knew, well, I shouldn't say we knew anything. We don't know anything. Knowing is a superlative that I don't like to use. Let's put it this way. I was 99% confident that this is going to reverse. It was going to find some very strong support as it had found all through pre-market and attract some buyers. And as buyers come in, they buy it, attracts more buyers, and it starts pushing the price up. And that's exactly. So then what we did is we punched up what I call the yellow brick road. That's that broken line, okay? As a matter of fact, I had punched this line up here, these yellow brick road lines, before these candles presented themselves. All right, these lines, these paths to prosperity, broken yellow lines, the yellow brick road, we put those lines up before the candles emerge, right? So this is our prediction as to where the market's going to go. And of course, as it rolled out, it did follow the yellow brick road all the way up. So what do you do? Well, here's the place to get in. You got to look for the necklines. That purple line is a neckline, a short-term neckline. Folks, what I'm telling you here, by the way, is solid gold. All right, I hope you're paying attention. This stuff is absolutely solid gold here, okay? There's a neckline, but to be more sure, you kind of want to go over to that next neckline. You can still make money here, don't get me wrong. And a lot of people made money here between this purple neckline and even the green neckline up here. But, for anybody who might want to be a little more sure, you might want to wait for that breakout on that green neckline. The reason is because we actually came down quite a bit in pre-market from the day before. Of course, I don't have that on this chart, but you have to trust me that the market was actually higher before. But this neckline was a pretty good break to the upside. You want to get in on these parts here. So if you want to get in right here where it breaks up that purple line. The next entry would be where it breaks up this green line. Just get in. Never mind what happened here. It came back down and tested some support. Not a big deal because after a big run up like this here, after a big run up here, you'll often see a reversal. Not a big deal. Well, so here's where it really got good, okay? First of all, let me see here. Oh, you know what? I actually missed a slide. Oh my gosh, I'm so sorry. What I was going to say was this. Had you followed this up here like this? Oh man, I wish I must have deleted a slide. Okay, if you'd have followed this here, the breakthrough from this neckline up here. All right, I'm going to insert this, and you'll have to trust me on something here, but I'm going to break this up in here. Okay, if you'd have followed, okay, cut this here. Okay, let me try and get in. Give me a break here while I insert this shape. Okay. And you got in here like this. Ran this up like this. Outline. I'm going to give this a different color. I'm going to give it this pinkish whatever color. And I'm going to have to thicken this up a bit to make it easier to see. I'm going to give it a thick weight here like that, okay? If you'd have followed this, in fact, I'm going to make it even a little bit thicker. This pink line up here, okay, you would have made, and I had this figured out. I am going to tell you, and I had the numbers written on here, okay? You would have made yourself about 26% on the at the money options, okay? Um, you would have made about 26%. That I know because I done I looked at it, okay? And I don't have the actual chart of the option up on that one now, but You could have made about 26% or so, actually even more. That would have been a conservative estimate to get it right there. You could have actually made probably close to 28 or 30% on that one. But here's where it really gets good. And I apologize, I'm missing a slide. But anyway, and this is what we teach in the trading room. And I'm not going to give you the keys to the castle here because you have to be in the trading room. That's where you're going to learn all this. But here's what gets really good. Had you followed our system and entered right here at the first sign, and this is again conservatively speaking, you could have taken that option from $5.30 to 6.25, a potential 18%. All right. Next one up. After it came back, bounced off support, went back up another 9% profit potential from 585 to 640. And a third run up here at 12% potential profit from 625 to $7. Okay. So these are potential. Now, I'm not expecting you to make 18 or 9 or because you don't know. You don't know until after the fact where it's going to go, right? Now that first trade here, this first one had a potential 26%, but we tell people, listen, aim for say 6%. Could you not have made an easy 6% on this? Absolutely, you could have. And you could have been very happy for the day and wrapped it up. But like I said, this is where it gets really good, where you made all of this potential. So if you'd have taken these three trades, which we show you in the trading room, then only 6% each. And by the way, these were almost sure thing trades with our setups. I say almost because I have to keep that out so people don't say, well, you said it's for sure, it's a guarantee, and therefore I'm suing you. Ah, sorry, good luck, pal. There are no guarantees in the stock market. But as pretty much as sure as we're sitting here, these would have worked out for you. And if you'd only taken three trades on this, you'd have walked with a very easy 18% on these three trades, making 6% each. And as you can see, actually considerably more. My goodness, 18% potential in the first one, 9 on the second, 12 on the third. So you could have, even if you just took a measly 6% on each of these, you'd have walked away with an 18% trade. And by the way, you were done just after 11 o'clock. Done just after 11 o'clock. All right, so that's the 2-minute tutorial. Probably took more than 2 minutes. Let's get into some questions here. And to be clear, I'm probably not going to be addressing any individual trades that you might be in, but let me see. IV, can you explain IV? Implied volatility. Implied volatility is there's a one of the Greeks, one of my favorite Greeks that like to look at, and what that is gives you an idea of how what they expect the markets to do, and when you get into okay, I like the number to be somewhere around 18 to 22%, the IV. All right. In my trades. Anything lower than that, you're going to have less expensive options, which is good, but you're not going to have as much of a move. So if you're shooting for, say, 6 or 8% or something, you might want to roll that back a little bit and maybe aim for 4 or 5%, right? If you have really high volatile options, they're going to move fast, fast and furious. And then if they go way off the charts, and I've seen this in the past, where your IV might be 50, 60, 80%, stay away. Stay away. Okay. Danger, danger. Here's what happens. So, and you see this a lot coming up with the earnings season, right? The company's volatility will go up as it gets closer to earnings season. Oops, I hit the wrong button. So what happens is, excuse me, people anticipate earnings. Volatility increases, the price of the options increase. Now you can make some pretty good money, but then the earnings come out and the volatility drops. And anybody who ever traded earnings might have noticed this where you're holding on an option and then the earnings come out the next day you open up your trading account, your trading platform, you're all excited because the company you had these options and it shot up nicely, right? It shot up. You say, ah, yes, I'm in the money, I'm making some money here. And then you open your options account and you're down. You say, wait a second, how did that happen? I'm holding call options. I should be up a lot because the market opened higher on my option on my stock, and yet I've lost money on my options. Well, that's because they sucked the volatility out of it. That news that they were waiting for is now come and gone, and they're not anticipating news anymore because they know what it is. So the volatility gets sucked out of it, and hence so does the option price. That's called the option. Was it the volatility squeeze or crunch or whatever they call it? So that's why I don't trade earnings. I don't trade earnings. It's too volatile. You never know how it's going to affect the option. If you're really lucky, you'll be okay, but it's too risky. So same as what happens with SPY. Sometimes the situation is really crazy. You don't know what's going to happen, and Trump is going to say something or do something, and so the volatility goes up. Especially if there's a huge opening gap in the market, you'll see volatility really rise. There was a day the other day that in our pick of the day, the pick was actually a no trade because the volatility was just way too high. So it's too risky. So what happens is with high volatility, the option price is very high. So let's say to buy it right at the market open, high volatility. You just paid $9, $10 for an option, and then they suck the volatility out of it. That option you just paid $9 just fell back down to $6. Guess who's holding the bag for the $3? You, right? So that's what that is. So I prefer it in that 18 to 22% range myself. So, all right, what do you do if the trade goes against you? You never hit your 6%. Do you hold for the next day or just bail out by the end of the day? Okay, so according to our bosses at Eagle Financial Products, we have to record an end of the day close. Now, sometimes if I feel good, personally, if I feel good about the trade, it's going to go back in my direction or whatever, I may stay in overnight and see what happens. I generally don't like to stay in a trade long. I'd like to be in and out of there quickly, but Mondays and Tuesdays I'll buy same week Friday's expiration, and then Wednesdays, Thursdays, and Fridays I will buy the following Friday's expiration. So I do have some time in there. Okay. Now again, I don't like to stay in them. I'd like to get out of the trades a couple days before they expire. The other day I did take a bath. I think I sold for, I can't remember now, 35, 40 cents or something, an option that I paid, I don't know, $3 or something for. So yeah, I took some losses on that. I did like it. What can I do? Some days you're the dog, other days you're the hydrant. But I will anticipate where the market's going before I decide to stay in it. And if I can't justify, right, if I can't justify staying in the market, if all the reasons that I had going into it are now gone, then it's probably best to cut losses. Okay. I'm also going to try and implement a thing that if the option does go against me 20, 30%, I'll probably just cut my losses and then get back into it later again as I can make some more money going back into it. It's the hardest thing to do to cut losses, but sometimes just you have to take it, right? Not all trades are going to be winners, even though we pick very high probability trades, right? Let's see. Sometimes, yeah, it's for next Friday. Sometimes I'll try and hold on. And that's the thing. If you got some time, you could be fine. You should be fine. Um, how much cash should I have in my account for one contract? Okay, so I recommend having, at least several $1,000s in your account to start trading. But I don't want you trading the whole account balance because when the stock goes against you, now you're in a panic mode and it's very easy to lose it very quickly, right? You always want to be available to trade the next day type of thing. Um, if I only have 5,000 in my account, I might probably want to just start trading with one or two contracts, maybe five contracts, not very many. I don't want to get crazy. If I have 10, 15,000, depending on the contract, I might want to trade, six, seven contracts. You just want to have that cushion in there so it's not going to devastate you should it go against you. Also, it provides for a cushion in that if you want to repair the trade, you have that facility because you'll need some more cash to get in and inject more cash into the option if you need to repair it. Because as you're repairing it, you're actually putting more money into it to average down. Okay, so that's kind of important there. So, um, okay, would you buy MU calls? MU calls, is that what I think it is? That's the stock. Is that like gold or something? MU, gold. Okay, so I only trade SPY, just so you know. I only trade SPY. Um, Hang on a second here. Uh, and Micron. Sorry, that's Micron. Okay, technology stocks. I only trade SPY. If you're looking for Micron, William, I don't look at any other companies. Okay, there are lots of companies out there that I could look at, but there's a lot of analysis you have to do with some of these companies, and not just those companies, but the other companies around them, the competition. I remember it was some eye disease, some medical company. They had a medicine. It was a one-trick pony for some eye degenerative something, macular degenerative disease or something, and they're going to hit it big with this new medicine they came out with. But what happened was the competition beat them to the patent office. So the company that I had my options in went down. The other company shot up. Um, it's a gamble. It's a crapshoot, and I don't. I'd rather not get into those other companies. I don't want to start doing analysis into all these other things because that could turn into a massive full-time job, you know, trying to track this stuff. So by just trading SPY, I just have to essentially look for the economy. Where's the economy going? And I can generally do that, right? I can get into the stock market here, right into on my computer at about 9 o'clock in the morning, and quickly determine where the market's going to go with some pretty good accuracy. So that's why I like it's just SPY. So, and I don't like to go 3 or 4 months out. I like to get in and out the same day, preferably in a few minutes, several times a day. All right. Okay. Okay. Question here. This is a good question. With the monster storm coming into New York City and other states, do you think Monday's going to have very low volume and not worth trading? I would say the storm is probably going to have minimal effect on the market because I think a lot, if not most, trading is done remotely. Um, and they can trade remotely if need be. I have not noticed in the past when monster storms actually affect the market. There's still a market, there's still pricing, there's still trades going on. Um, Maybe if the volume is a little bit lower, it shouldn't really hit the market that much. I'm not really sure. We're gonna wait and see what happens tomorrow and just kind of watch, right? So. Okay, question here from Susanna. Hello, Hugh. I know that between you and John, you're over 3,000 per year to date. Is that for both of you? If we're working with a $10,000 account, we can't trade both. Therefore, our numbers will match yours. Is it really realistic for $1,000 a week with the $10,000? Oh, for sure. Okay, so the question is it really realistic to make $1,000 a week with a $10,000 account? And I'm taking that as a cash account. The answer is absolutely yes. If you have a $10,000 account, you're making 10% for the week. So to be clear on those numbers, I think we had 8 losses. I think I had 5 of them, and John had 3. But never mind following that. All right, Suzanne, here's what I would do if I've got a $10,000 account. Don't trade the full 10,000. Maybe buy 5 contracts at a time and look for 10 cents. 10 cents. If you do that 4 times, is that right? Sorry, if you do that 4 times, you made $200. Or you could take 10 contracts, all right, say at $3 or $4 each, so that'll be about $4,000, and try and get 10 cents each, which should be not a big deal by trading that time. So I guess what I'm trying to say is if you can make, say, $100 on each of those 2 trades, and let's say every day you come in with $200 per trade per day, which should be easy to do. In fact, we should probably do that tomorrow. Okay, remind me if I forget. If you make $200 a day, all right, and it should be not that hard. There's your $1,000 a week, right? 5 trading days. There's your $1,000 a week, and you should be able to do that with the $10,000. The thing to keep in mind is that make sure you don't overtrade is you'll get a little email from your broker saying you have to wait until the trades settle the next day before you can trade that cash account again. But absolutely, 100%, you should be able to do that, Susanna, without breaking a sweat. Okay. Okay. Right. how can you tell when to sell this at the top? Reggie. Okay, so Reggie's asking about, good question. I think he's going back to those charts I showed you. When to sell at the top. So you never know where the top is until after the fact, right? But we determined those tops to be, I think the lowest one was a 9%. Then there was a 12%, the third one, and then there was the first one was like 18%. All right. But I'm saying don't shoot for the top. You don't know where the top is. But when you see these chart patterns, and there's other things that we teach you in the trading room that we show you in the trading room. So obviously that chart I showed you, there's more to that than just what I showed you. Okay, obviously. But this is what we talked about in the trading room. So when you saw those, you would have had a lot of confidence that you would have made at least 6% for each of those trades, at least 6%. Okay, because of what we show you and what we teach you and talk about. So there's everything was pointing to a very positive move to the upside. In fact, I think it went even higher after that. So absolutely. So right. How many contracts would you recommend with a much larger count of $500,000? John, if you're trading $500,000, we need to take this offline. Okay. Okay, so I used to trade a long time ago, over $100,000, and I used to get filled within like a very short period of time, maybe a minute or something, a couple minutes at the most. I would say don't trade, don't go trading tens of thousands of contracts at any one time because you're going to affect the market price. This is what the big boys do. If they're trading, say, $500,000, they're going to come with, 100 contracts here, 500 there, 1,000 there, 700 there. They're going to piecemeal it in, okay? Unless, unless they want to affect the price, in which case they'll go in heavy, okay? But if you were to trade, say, let's see, $500,000, and if you have, say, an option costing $5, so what's that, 100,000? I guess 1,000. So 1,000 contracts at $5 would be $500,000. So if you're going to come in with 1,000 contracts, you're gonna influence the market, and probably not in a good way. So you're gonna put the pressure to the upside in buying it. And then you're gonna have to, and then the market will probably move up on the option. You'll probably end up paying a high price as you get into it. Anyway, I would leg in. If it was me, I would leg in piece by piece, so you're not standing out like a sore thumb on that one. So, what else I want to do here? I do want to do some stuff here. I want to talk to you about not the random number. I'm just queuing something up. Take this out of here. Okay, get this out of here. All right, I want to tell you about okay, I got to tell you the things that we talk about, right? We have those programs that you need, all right? Because everything we teach you, we have programs, and nobody else does this. So don't go looking around for stuff, you need what we have. Now, we started this many years ago, 16 plus years ago, 16 and a half years ago. It'll be 17 years in May this year. Inner Circle. This is where we get your morning market analysis. John writes this up every morning, very comprehensive. He does all the heavy lifting here. All right, he's going to tell you everything you need to know. So you don't have to go in there at 7 o'clock in the morning and acquire all that information that he puts together, and he packages it in a way that you can make sense of it. Later on in the day, you're going to get a follow-up report as to what I actually did. Well, not just me, but John. John, I did in the market here. You'll also be invited to the Wednesday night interactive meetups. These are excellent sessions where he talks about anything and everything for the day's events, and these are recorded in case you cannot be there live, right? We get this a lot. People in Europe, for example, they're not going to be up at 3 in the morning to see this, but they're going to get it first thing in the morning. They open up their inbox, and there's the recording. All right. We do the heavy lifting in here. Now, here's the cool thing about this inner circle. Believe it or not, it works out to like less than $6 a week. Less than a cup of coffee. You are going to get first class information and assistance. And yes, you can even learn a lot of our programs and our systems and stuff in the Wednesday night sessions. You're going to get a lot of great information. Everybody, whether you're a novice or a seasoned pro, should be in the inner circle. And for $2.99, this is actually a no-brainer, an absolute no-brainer. By the way, if you missed these, getting the screenshots of the QR codes, don't worry, we're going to present them in the end as well. All right, they're going to be a screen. You can, they'll be on there for a good 2, 3 minutes. You can get them there too. Our Day Trade Spy Signal, one of our more popular programs, it's issued to you 3 to 5 times a week, algorithm based, sent to your email and cell phone. So if you're out there shoveling snow, if you're out there taking the kids to school, if you're out there pushing the bus out of the ditch, your cell phone rings. Stop what you're doing, pull up your phone, pull up your platform, make the trade. We tell you a very specific option with which to buy immediately, put up for sale for a 5% profit target, walk away, come back, collect your money. All right. If it is not sold at the end of the day, all right, then sell it for the market price. But you'll find that, and again, using money management techniques, never put in more than you can invest to lose, never invest more than you can afford to lose, and don't go crazy. Just a regular say, it's like these guys that buy these lottery tickets. They play the same numbers every week, for their life. If you ever ask these people that win and beg, they say, well, how'd you win? Well, we play the same numbers every week, every week. We have been doing it for 50 years. Well, it seems like that's the way to go. So play the same number of contracts, perhaps, 10 contracts or whatever it is, and just keep doing it, and you'll see success with this. It's been going extremely well. Cost of this is $14.95 a year or $3.99 a quarter. You can cancel anytime. And same with the pick of the day. Now, this is determined by John and myself. Unlike an algorithm based, we handpick these trades. And we email this to you just after 9 o'clock Eastern time every day. And the trick is here to buy it at the market open. So if it's, for example, a call option, when at 9 o'clock or 9:30 hits, look at the charts, the 1 minute chart. If the pressure is to the upside, you'll want to get in, right? If the pressure is to the downside, wait until it turns back around, then get in, right? Then sell it for a 6% gain. Usually you get filled in a few minutes. Again, if not sold by 4, sell it at market close. Although those people who've been with us know that, well, you know what, I can actually hold on until tomorrow on this one or whatever. You may not have to, you can hold these overnight. And a lot of times I do. Okay, a lot of times I will hold these overnight. Okay. Same, excuse me, same as the signal, $3.99 a quarter or $14.95 a year. The trading room, this is our big performer, hosted by John and myself. Together, we have over 45 combined years of market experience. Interactive, folks, learn and earn, fully narrated. This is where strategies come alive. Every morning we do this, 9:20 to 10:30. We've been actually starting a little bit earlier for anybody who's new on, just kind of going over what our charts are all about. All right. These are also recorded for later review. A real deal, believe it or not, 2,500 a year, sorry, 24.95 a year or 6.99 a quarter. Essentially the price of a half a Subway sandwich. Not even a lunch. Not even a lunch for both John and myself. It's a lunch for one of us. This, believe it or not, is the best value. Now, you don't even have to know a lot of stuff. If you know what calls and puts are, you need to be here. All right, this is where you need to be. If you can, join us in this one at the trading room. Folks, here's the cool thing. All of our programs, except for the live event I talked about earlier, has a 30-day money-back guarantee. It's not a problem guarantee whatsoever. You simply call them up and you tell them, guys, it's not for me. I don't like it. It's not what I like to do. I got to cut out. They'll say, fine, we'll reissue your money back 100%. No problem, no questions asked. I don't know of anybody else who does that. All right, let's get some more questions before we can wrap it up here and get into our contest. You know what I'm going to do? In fact, I'm going to tell you about our contest. Please, folks, in the questions box, put a number between 1 and 100. Okay, we've got a random number generator, and that's how we're going to do it. Okay, random number generator. Just put your number in the questions box. All right, and while you're doing that, I'm going to go check some of these other questions here. Make sure to exaggerate more when you do a trade. Sometimes miss it when you do a trade. You're talking so fast. Anyway, you can put the trade on the screen. More visual person. Okay. Yeah. Okay. So, I mean, this question comes up a lot in the trading room. If we can put our trades up on the screen. Unfortunately, we can't. Now, there's a mechanism on Zoom that allows you to transcribe what we're saying. The problem is that things do happen fast in the market. The market doesn't wait for anybody, not even us. So if we discuss something, it's best to pay attention. I realize it's like it's like flying over New York City. My hair's a mess. Flying over New York City with air traffic control nattering at you and all the other planes. You've got you got 100 planes in the sky trying to land on runway 26 or something. Um, it's you have to pay attention, but don't worry about it because you will pick it up. All right, we will try and maybe a little bit more pronounced. And okay, I'm looking at the 689 calls. Here's I'm looking at trade. I'll try to be a little more pronounced in that, Jim. But can't guarantee you. And unfortunately, we really cannot just put them on the screen. By the time we do all that typing and stuff, the trade could be over. A lot of times these trades are over in a matter of like a few seconds. Maybe not a few seconds, but like a minute or two. Okay, so, but we will try and endeavor to make it a little more clear. And I told John too that if I'm talking about something not important and he's going into a trade, go ahead, please interrupt. And I do the same with him. All right. John said, I'm only trade maximum tuna contracts. That's a good thing. If you only trade maximum tuna contracts at a time, that's probably not bad. And if you're trading $500,000, do 200 at a time, all right, or 100 at a time. That's probably a good thing. Do we put on OCO trades? No. No, one cancels the other. No, I try and keep it as simple as possible because this way I can control it a little bit easier. That's all. Okay, so everybody, I'm going to give you another, say, 10, 20 seconds here to get your number up on the in the questions box. And we are going to pull up our random number generator. This is the official DayTradeSPY random number generator. Now I'm going to pull this up. This is not the number. This is yet last week's number or whatever. Ignore the 42 in here. That is not the number. Oh my gosh! Every time I pull it up, this is what happens, right? Did I lose it? Where did it go? Random number generator. Here it is. There it is right there. Okay. All right, guys. All right. I have everybody's number. Let me go down and see. The last person is Michael R. Okay. Now I'm going to hit the button here. Now the number is 321. Oh, the number is 1. Seriously? Okay. The number closest to 1 wins the ebook, Triumphs and Tragedies. Wow. Okay. All right, let me write some of these names down here. All right. I think we're going to be pretty far. Arnold is at 25. Rod T. Oh, 25. Let's see who is closer to number 1. Jim L is at 24. Okay. Oh, beat up by Michael R. Michael R at 19. Okay. Michael R came in at 19. I better write his name down here. All right. Michael, tell you what, give me your answer. What do you want? Tips, tricks, and traps, or triumphs and tragedies? Let me know in the questions box. What is it that you want? Tips, tricks, and traps, or triumphs and tragedies, and I'll get that to you. Okay, because if you already have an ebook, I don't want to give you a duplicate. So let me know in the questions box which one you prefer. Meanwhile, okay, let me see. Get this out of here. Get this out of here. I did the contest. What else? Okay, gang. There are the QR codes for the various programs that we have. Please click them and register, subscribe. Don't forget, except for the live event in Baltimore, you do have a 30-day money-back guarantee. As always, it's been a pleasure. Good night, everybody.
Just shout it loud and clear. I wanna know if you You're the one, shine brighter than the moon and the sun. Be great at what you do, give it all of you, and trust the process and keep your eyes on the prize. I can tell